Good afternoon everyone, 10 to 4 here in the UK on Friday the 8th of January. The non-farm payroll report has come and gone. There was a great deal of volatility at the open, but the US market's still hanging in there. All of the measures of the trend on VectorVest are up, and the FTSE's come off the gas a little bit. The advances and the declines pretty much the same. If we have a look at the VectorVest market timing chart of the US, really not that much has changed. I'll put on the what's called the MTI layout, and we can see that divergence that I was worried about between the price and the buy-sell ratio has been blown out of the water by the trend over the last few days, especially the trend in smaller caps, which has outperformed significantly the overall market. So that is the story since last April, when we first started to take positions in here. So the trend is strong, folks. I'll look at the S&P in a second. As you know, I trade the S&P, and in fact that's probably a good place to go now. And there's the S&P pushing up. That was the sell-off last Monday, and it's now broken well above that, and I think that bodes very well for a very strong move here. I think markets have made a decision for us. I was not worried, but I was watching this level, and when that level went, I think that the shorts have taken a hiding here this week. Many people would have in fact shorted the market based on the divergence, based on this big brute of a red bar that occurred on Monday, and clearly when those people in fact had to cover up here, that will precipitate the market considerably higher. So this looks very, very strong to me, folks, and I maintain my bullish outlook. I have positions in the American market, not as many as maybe as I should have. I bought back into apps. I bought into Square the other day. It's going well. Apple is still underwater but getting better. Moderna, in fact, is not a position of mine at all, but I discussed that with a customer this afternoon, so I put it in there for ease of look. Peloton I bought the other day. I'm still holding Ingersoll Rand. I'm not quite sure why. And C is going very nicely indeed. So Square has had a particularly good run. Square's been very good to me over the last year, and it's nothing more, folks, than my standard setup. Let's get rid of a great deal of all of the lines on here so you can see the wood for the trees. As you can see, it pulled back to that last old top, and the stochastic didn't quite get down to the 20 level, but nevertheless showing divergence between here and here. That's that reverse divergence that I keep talking about to anybody who'll listen. So a textbook setup, and I bought into it. As you see, it went right down here, then with a couple of inside days. That's what I refer to as a double inside, and I bought into it as it broke above that high, and quite nicely in the money there now. So that's going very well. So quite happy with all of those. Peloton, I really need not just the Peloton share, but one of those Peloton machines, because as you know, the gym is closed. I couldn't resist Peloton. Same thing, folks. It pulled back to the last old high. The stochastic showing reverse divergence, but well above, in fact above even the 50 level, 56, but nevertheless bought into the open yesterday morning, going quite nicely indeed. Pull back to the last old high. Pullback happened in 3 waves. I think you would also see a little bit of a spring there, but I think it's what I refer to as a sweet spot. Now, interestingly, if I get rid of the stochastic here, it's a really good example of a volume setup as well, because in this run up we see this increase in volume, and in the pullback no volume. I'd be happier if I saw more volume coming into this. I really would, but nevertheless, the position is nicely in the money. It was a very low risk to start with, and although I haven't done it yet, I must get my stop to entry in that just after I finish doing this video. So reasonably happy with all of those positions. I think that the one thing that I'm not happy about is the darn gold market, and I keep telling people that gold is not for everybody, and as you can see, I was expecting when I did this video at the start of the week that this would come back to here. That's normal, but this weakness today has worried me. We're still okay here for those of you that are fib fans. I know that's not everybody, but nevertheless, as long as it stays and keeps its nose above 1840, but it could easily get back to 1805 here before starting to move again, and of course the whole thing could fall apart. But as long as it stays above 1840, then I think we're still in the game here. Disappointing that 1885 level in fact broke in really good big style this morning, so that's a bit disappointing. In the UK, well, I looked at the UK market a moment ago and everything's still hanging in there. As you can see, a great deal of green. And I'm holding all the positions. I haven't bought into anything or sold anything since the last time I've spoken, so holding all of those positions in the UK. I'll let you have a quick look at them. Sylvania, Team 17 moving quite nicely, up 4% yesterday. Let's just have a look at that one. This is a stock that I've had a great deal of faith in. I just only bought it here at 710 or something, but it's moving quite nicely indeed and doing everything that one would expect, pulling back to the last old tops. They don't go up the page in straight lines, folks. But this is the earnings per share increase that's driving the share price, so that looks very good to me indeed. Games Workshop still hanging in there. Pershing Square, a new purchase, only a week, and moving quite strongly. Halma's had a great week, so reasonably happy with them all, and even in the face of this COVID crisis in the retail sector, JD Sports hanging in quite nicely indeed. I suspect that Polymetal and Pan-African Resources will have taken a bit of a smack today. Let's hope that that level that I spoke about, that 62% retracement in the gold market, can in fact hang in there. Just remember that gold is not for everybody, and I think that you've had a good illustration of that over the last 24 hours. Gold stocks are far from being worry-free investments, ladies and gentlemen. Okay, so all is good. Let's go back to the American market again and have a look, and as you can see, the advance is starting to move up a little bit, and again, if we go to the S&P 500, and this is starting to push up 30. It went down as low as 38.03, I think, and on an intraday chart there was a 78% retracement. On the 5-minute chart it's at 38.03, and it's now pushing up. I remain quite bullish here, and I think that there'll be still shorts in this market that are sweating it out up here. If they were to throw in the towel, this thing can move and move quite strongly indeed. So I look forward to seeing everybody on Monday afternoon at our Q&A session, 1:30. As always, if you want to have a look at what we're doing, just send me an email and I'll give you a guest invite. david.paul@vectorvest.com. Thanks very much indeed. Just keep your eye on your stops in the gold market.